Perhaps the biggest news of the day is a salvo of ratings downgrades from Moodys. The ratings agency downgraded South Africa's top 4 banks, arguing that there's a higher risk now that the central bank in South Africa will impose losses on creditors, given how it's handled the creditors to African bank investments when he bailed the company out in early August. Moodys placed the 4 banks on review as well after having cut the long-term local currency deposit ratings for Standard Bank, First Rand, Nedbank and Absa. The agency said that the SARB's bailout plan mitigated the risk of contagion spreading among the country's banks, but the South African Reserve Bank says it doesn't agree at all with the reasons given for the downgrade. Economists have been quoted as saying that the high interest loans not backed by collateral are essentially symptomatic of deeper economic issues in South Africa.
Well, my honest opinion about ratings agencies since the financial crisis is that they've become extremely conservative because they got it so very wrong during the property crisis that we saw in 2008, 2007. They're almost trying not to do the same sort of thing. So it probably is a bit of an overreaction.
I would say their thinking is dubious. If you look at their justification, they said that bail-in of senior debt holders implies that in future, the Reserve Bank might not be there to support other senior debt holders if another South African bank gets into trouble. I think that misses the point that before the bailout, the debt of African Bank was trading at 40 cents in the rand, while after the bailout it was closer to 90 cents in the rand. So they did support the debt holders. The situation was even worse than a 10% haircut would justify. So I don't think one should say therefore the whole risk of the banking sector in South Africa has increased and that foreigners therefore need to be careful to invest in our banking sector because the Reserve Bank is there as the lender of last resort.
Let's expand this conversation and reel in Melanie Ralph. She's live in London, and Angelo Kopel, of course, has been following this story from Johannesburg, South Africa. Angelo, let's start with you. What's the immediate cost, if any at all, of Moody's downgrade on the 4 affected banks?
Well, I think the day traders amongst us were probably rubbing their hands in glee when they saw the announcement and trading open this morning because the bank stocks were all down on some fairly large volumes today. Analysts said it was, as you heard earlier, short term, and it was definitely a reaction to the downgrade. First Rand at one point during the day was down 1.5%, Nedbank 1.2% down, Standard Bank 1.6%, Barclays around 2%. Not surprisingly though, the Capitec share price, which had taken its medicine last week, was trading marginally up today. So that kind of helped the banking sector index up a little. At the close or near the close today, it was down 1.4%. So there were definitely some short-term impacts. Bottom line is, let's see what happens tomorrow when the stock starts trading again. I expect a slight rebound, Raman.
Indeed. Melanie, Razia Khan, Standard Chartered's head of research for Africa, had argued a little earlier today that, and I'm quoting her here, one bank with a highly flawed business model went into curatorship. Now we see a possible overreaction with a downgrade to every other major bank in South Africa. End of quotes. Now, are those sentiments that Moody essentially overreacted widely shared on your side of the pond?
Well, we've all seen the ripple effects that one flawed bank can have on the other. Certainly, though, South African Reserve Bank suggests that downgrades are an overreaction, saying the banking sector remains healthy and robust, and they don't agree with the rationale given on taking this step by the ratings agency. Bankers and central banks are insisting that African bank collapse was isolated and largely due to its business model, which was dependent on unsecured lending. Moody's, however, downgraded because they think that South African authorities wouldn't be able to fully protect creditors if need be. But as I say, we've seen this situation before, and Moody's decided to err on the side of caution.
Indeed. Angelo, we've seen the SARB, of course, disputing Moody's assessment, but walk us through the reactions that we've gotten from these 4 affected banks.
Well, 2 of the 4 have decided that they should post something onto the Stock Exchange News Service. Standard Bank came out and said that their overall liquidity position remains strong, with liquidity buffers amounting to around $16 billion in place. The bank says its capital and liquidity ratios are in excess of the regulatory and other internal requirements, but they're not telling us what those numbers actually are. They're a bit shy in terms of the specifics there. Nedbank was the other bank that spoke out and said they were well funded and it had an average long-term funding ratio of around 24.9%, and they had a liquidity asset buffer of around $2.6 billion. Both banks did say that they support the SARB decision to bail out ABEL, but they probably would have to say that because they're part of the rescue plan. Raman?
Indeed. Melanie, let's look at the numbers that the ACRB provided in backing up its argument. Sector non-performing loans about under 4%, really leverage at a multiple of about 13. The sector delivering a return on equity of about 14.25%. Given those numbers, why is it that Moodys sees a higher likelihood of regulator-imposed losses on creditors?
Well, this is why some analysts believe the latest wave of downgrades may be an overreaction and that actually the South African banking system remains one of the best regulated on the global stage. But Moodys is insisting that they're not only looking at what deals that banks have been doing, but concerns over general economic growth, in particular in Africa's most developed economy, South Africa. We know the long mining strikes have hit growth hard, not to mention its economy trying to battle high levels of poverty and unemployment. So the banks could very well find themselves on the wrong side of the ratings agencies once again if the broader economic threats persist.
Indeed. Finally, Angelo, let's talk about the wider issues here that Moodys did raise in their statement. How concerned should we be about the ability of South African households in general to keep servicing unsecured debt, especially since inflation keeps going up? It was up about 0.8% month on month between June and July, and income growth is essentially stagnant.
Well, we should be concerned. South African household debt averages at around 75% of disposable income. That average, though, hides the real damage that's being done at the low income scale of the household market. And that's where the unsecured lending is happening. It's in this sector also that food accounts for around 1/3 of household expenditure. Hopefully, though, global food prices are coming down marginally, and we might see some of that impact on South African food prices. But I'm not holding my breath there. There is a little bit of respite, though. Today we heard the July Consumer Price Index numbers. They came in at 6.3%, which is down from 6.6% in June. There is also another little bit of good news there. International crude prices are pretty flat at the moment. So it's unlikely that consumers are going to get hit with another petrol price in a couple of weeks' time. Raman, as they say, every bit helps.
Indeed, we'll have to leave it there for the time being. Thank you very much for that. That's Angela Coppola live in Johannesburg, South Africa, and Melanie Ralph live in London. Now then, let's take it to East Africa, where a new recycling plant in Kenya is collecting electronic waste equivalent to the weight of a Boeing 747 every month. Now, the world's growing mountain of electronic waste is simply being dumped on developing countries, much like Kenya. And now the East African country's government aims to become the first African state to enforce regulations on the import and disposal of electronic waste.
In the industrial area outside of Nairobi, Kenya, a row of workers in yellow jumpsuits take shiny new power drills to computer components. But this is not an assembly line. They're dismantling old computer hard drives and spent central processing units or CPUs. As electronics grow in popularity, a problem is emerging. What to do with end-of-life technology?
You will find that most people, when their phones are dead, they give their children as toys, and then the children play with them, break them, and even dangerous materials like mercury. Children get exposed and people get exposed to a lot of dangerous materials that are used when electronic products are being manufactured.
Last year, 50 million metric tons of hazardous electronic waste was generated worldwide, enough to fill 100 Empire State Buildings. Dumping hazardous electronic waste alongside normal garbage is illegal in most Western countries, but it's more expensive to dismantle and recycle e-waste components. This means that much of the world's e-waste has been exported to developing countries like India and Kenya, where it often ends up in landfills or on bonfires, exposing people to toxic substances like lead and mercury.
So you can imagine all this amount of electronics that are coming to the country, but we don't have a proper way of disposing it. Because you can imagine if you're giving a class 1 kid a laptop, it's very easy for this laptop to die anytime. So the lifespan of these gadgets is going to be very short.
That's why former government minister Margaret Kamar and a team of managers at the East African Compliant Recycling Company have worked to draft legislation on the disposal of e-waste. In June, the President of Kenya, Uhuru Kenyatta, assented to an amendment to the Public Procurement and Disposal of Assets Bill requiring e-waste to be disposed of at government-licensed facilities. A first for Africa.
In Kenya, we have managed to come up with the e-waste regulation, and I'm glad to say that Kenya is the only country with the e-waste regulation which has been passed, which is in Parliament.
A key component of the proposed regulation puts the onus on producers to ensure their products are discarded responsibly. East African Compliant Recycling has worked with manufacturers like Microsoft, Hewlett-Packard, and Nokia to ensure that companies will be accountable for disposing of hazardous material in products exported to Kenya.
We have like the fluorescent tubes, which has mercury. We'll spend money to treat this mercury because it has negative values. That's why the regulation comes in. The producers of these negative values, they will pay so that we get this money to clean these things from the environment.
Motherboards, the printed circuit boards found in computers, can contain valuable metals like copper, gold, and silver. East African Compliant Recycling collects an average of 59,000 kilograms every month.
The truth is that there is also value in the materials that are being used to make e-waste. Not everything is going to be waste. In fact, there is a lot that can be recovered. That's why we normally say that you can convert your waste actually to be something very useful.
Other African countries are watching Kenya's handling of its e-waste closely, with Uganda considering opening a similar recycling plant. Peter Akaba, CCTV.
Some commodity news now. Brazil could record the worst ever coffee harvest in 2015, given drought that has damaged most of the Arabica crop for this year. Now, the stretch of hot, dry weather on record in Brazil's coffee belt has cut about 30% out of the 2014 crop and pushed prices to a 2-year high for Arabica coffee beans. Researchers say that the 2015 crop has stunted branch growth and unusual leaf fungus can be spotted. Now, they expect Brazil to produce roughly between 24 and 27 million bags of the prized Arabica coffee next year. The piecemeal flowering and dismal forecasts are all likely to revive concerns about the quality of Arabica beans in that country. Potentially, though, that might mean higher global prices, especially for premium bean producers like Kenya. The conditions are, however, expected to hurt farmers' profits and force roasters to seek out new sources of beans or perhaps even rely, horror, this story is, on the lower quality Robusta bean. Right then, quick run through the markets here for you. Let's see what your equities have been doing. Not much of a development, quite frankly, across most of the markets that we do track here. Fairly short movements on some of the equities. In Kenya, however, some interesting developments out here. Kenol Kobel finally back in profitability. Pre-tax profits up by almost 300%, and this is mainly a function of some fairly brutal cost cutting over the last 2 fiscal years. British American Insurance also producing its half-year results today. A 31% jump in pre-tax profits as well. When we come back, we'll be looking at Ethiopia's diaspora. They're cashing in on Addis's rising position as a continent's diplomatic hub. All that and more is coming up next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
We do know that the strike isn't anywhere near close to coming to an end either. That means that those workers are going to sink even further into poverty.
At 18:15 GMT, you're watching Global Business Africa. Let's move on to Ethiopia now, where the country's diaspora are returning to cash in on a recent boom in the hotel industry, especially in the capital, Addis Ababa. That city is positioning itself as Africa's diplomatic capital, and that in turn is enabling it to attract diplomats and professionals for conferences and business meetings. On What's Hot tonight, we look at some of the high-end hotels that have sprang up in Addis Ababa.
The newly opened Washington Hotel in Addis Ababa's commercial district Owned by an Ethiopian couple who have migrated back from Washington, D.C., the hotel is part of a growing series of businesses started by Ethiopians returning from the diaspora to invest in their home country. With 65 rooms, the Washington Hotel boasts a penthouse which costs about $950 per night. Meraf Asfau is the hotel's creative director.
We wanted to create something new here in Ethiopia that's never been seen before. One of the unique things about Washington Hotel is our presidential penthouse suite. It's really unique because the construction was done in a very dynamic way that separates us from any other hotel here in Ethiopia. It's a two-leveled penthouse. It has a jacuzzi, it has steam, it has sauna, it has multiple bedrooms, it has living room, family room, bar, your own kitchen, so you can make whatever you want. And it's really unique and never heard of here in Ethiopia.
Often referred to as the Brussels of Africa, Addis Ababa is the headquarters of the Africa Union and the United Nations Economic Commission for Africa. The city frequently attracts diplomats and corporate clients for conferences and business meetings. Industry experts say the number of hotels in Addis Ababa has tripled in the last 3 years. Also seeking to cash in on the visitor influx is the Capital Hotel and Spa, a 5-star luxury hotel that also offers meeting and conference facilities.
The technology flow coming up from abroad through the diaspora will be in the human aspect, soft skill, and also management aspect, and also in the hardware aspect. So they're going to be was an opportunity and a threat, but we believe in competition. So far in our country, there used to be a few hotels running the majority of the business or taking the lion's share of the business. But when other hotels are built, and you will evaluate yourself and you will measure the true value of the service that you are giving.
Addis Ababa aims to become one of Africa's most modern cities. New roads and buildings are now a constant part of the city's landscape. The industry is being driven by the country's growing economy. The Ethiopian government is also planning to develop the tourism industry.
We have had a problem in Somalia, now the situation is better. We have had a problem in Sudan, the situation is better. So the surrounding area is quite clear now. So because of that problem, Ethiopia is one of the hub of that area, which is very much free of any terrorism or any difficulties.
Ethiopia has one of sub-Saharan Africa's fastest growing economies and its 5th biggest. Mahia Mutua, CCTV.
Over in South Africa, mobile payment solutions are rapidly gaining momentum, and the new players coming to the scene almost on a daily basis, really. FlickPay is a new app that allows both the user and merchants to be jointly integrated into the transaction by incorporating it right at the point of sale. Travis Andrews has been given the app a try.
Waiting for a fresh brew of coffee can be quite an arduous task, and paying for it with a wad of cash can be just as taxing. But that may be not for long, because the new app aims to take the stress out of paying. FlickPay is a cutting-edge payment app that's been launched by a Cape Town startup, and its co-founder believes they've hit the button by incorporating it at the tills.
We integrated it into the point of sale, so that's very different to what everyone else is doing. That means that the whole transaction is closed loop in the point of sale, and the cashier gets to see when the transaction is complete on his screen.
The app has been developed in-house and uses some elements of Level Up and PayPal, but it's adapted to the local conditions. A unique QR code generated by the app allows the user to pay at the tills within an instant. It's one of the ways in which society is moving. More and more people are embracing an environment in which payment apps are becoming the preferred choice of settling the bills.
You know, if you look at all the apps that are around, we've got banking apps, for example, that can go onto your smartphone. We've got transportation apps that deduct money out of your credit card, all on your phone. We're seeing money transfers, we're seeing apps like M-Pesa coming out of Kenya. So yeah, we're seeing a lot of cashless type transactions happening, and there's certainly a massive growth in that. You're actually not redeeming it.
There's been a spike in the growth of the mobile payment sector, and that in large parts can be attributed to the increased mobile penetration in South Africa.
Younger generations are far more likely to adopt apps and try new things. So I think the confluence of timing is quite good right now, where you've got a smartphone-savvy generation which also has disposable income and access to the means to pay and things like that, which is now creating an enabling environment.
Like the other mobile payment apps that are already available, FlickPay will have to compete in a growing and competitive market, where many are increasingly grabbing for their phones before their wallets. Mobile phones are increasingly playing an important role in daily life, and more people are embracing the simplicity of a payment app. It's just one of the many steps that is paving a way to a cashless South African society. That was Andrew, CCTV, Cape Town.
Right then, now a quick run through commodity prices. We've spoken about coffee a little early in the bulletin. You can see the net result, of course, of the problems we're seeing in Brazil with Arabica output over there on the prices that we are seeing on your screen right now. However, the interesting bit today, crude prices. We're still seeing that glut, bit of a fluctuation. The interesting story, however, is that some traders are now hiring tankers to store oil in. The anticipation, of course, is that you can actually keep the stuff and then have the return of the mega profits which you saw back in 2007, 2008 by playing around with the price differentials. Fascinating story this. We'll keep tabs on it for you here on Global Business. When we come back, we'll be talking to one of Nigeria's youngest CEOs. They're benefiting from the risk to venture into business fairly early. Gen Y is in the hot seat next. Welcome back. Now, in West Africa, Nigeria may be battling several security challenges. Boko Haram, of course, right at the top of that list. But its economy is braving the storm and it's ticking along fairly well. The first quarter of 2014, for example, the country's real GDP was up by about 6.2%. Now, that consistent growth does create opportunities for new startups. And it's not uncommon to run into young CEOs who are in their 20s. Here's Deji Badmus with more.
How many things do we have? Meet one of Nigeria's youngest CEOs, Sunkanmi Ola. At just 22, Sunkanmi is the founder and CEO of digital advertising agency, Syracuse Digital. He and his team here are holding a creative strategy session, brainstorming on an ongoing project. Like Sunkanmi, everyone in the team is in their early 20s, young, vibrant and energetic.
It was actually in my fourth year of engineering that I came across digital marketing and what it could be. I saw it as a very strong and solid point, or a very strong and solid opportunity to venture into entrepreneurship as compared to the engineering that I was studying. And I think things just picked up from there.
Things picked up indeed for Sunkanmi and his dream. After graduating from the university in 2012, he got two friends to join him, and they began gate crashing on pitches.
The worst that we felt could be done was for them to tell us to not come in.
And before long, the big break came. They landed their first client, Chinese phone maker Techno, even when they had no office space.
We used to work from anywhere practically, from my room, from my friend's house, from anywhere, just as long as we had our laptops and we could connect with each other. And at a point, we felt we needed to work from the same area. So I talked to someone, and the person just gave us a little room at the back of his office somewhere. And we grew too big for that place. We moved into some form of office. And at a point when we decided we had stayed in the incubator stage long enough and it's time to move out and go out there, we decided to come here.
From just 3 persons at inception, including himself, Sunkanmi now has 12 persons working in his company, and he's quick to tell you he doesn't consider them as employees.
We all work with each other. They don't work for me, they work with me. That's the way we see things, and I think that has brought that extra, should I say, mindset to the way we handle things. There is no particular boss, although of course there is a level in which things, the particular structure by which we work, but there's no boss, there's no subject. So we just sit down, we cook up creative work and we deliver gold.
Syracuse now runs campaigns for its clients beyond Nigeria, hitting such markets like Ghana, Ethiopia, Kenya, South Africa, and occasionally the Middle East.
We had a dream to be the biggest digital marketing agency in the country in 5 years. And I would say we are very well on course to achieve that goal.
With what Sukomi and his team have been able to achieve in just 2 years of starting up, it is hardly doubtful they would hit their goal in 5 years from now. Deji Badmos, CCTV, Lagos, Nigeria.
Now, the Ice Bucket Challenge seems to have taken Asia by storm. Liu Zhou, the founder of the mobile phone maker OnePlus, was the first to initiate the challenge on the Chinese mainland. Also joining the ALS cause, several tech giants in China. They've taken up the challenge and also to donate, and that includes the renowned Foxconn CEO Guo Taiming, Lei Jun, the founder of China's smartphone maker Xiaomi, and Zhu Hongyi, the founder of China's IT company Chiho 360 Technology, and several others. Now, across the sea in Japan, the billionaire founder and CEO of Japan's third largest mobile carrier, SoftBank, Masayoshi Son, doused himself in ice water on Wednesday for the charity Ice Bucket Challenge. This, of course, has become quite the global phenomenon, with celebrities like Facebook CEO Mark Zuckerberg, Microsoft founder Bill Gates, and the football sensation Cristiano Ronaldo, who did it in his undies, by the way, dousing themselves in freezing water and then posting the videos online. The challenge is part of efforts to raise awareness for the neurodegenerative disease called amyotrophic lateral sclerosis, also known as Lou Gehrig's disease. Those who've completed the challenge can nominate others to do the same. Anyone who refuses to take up the challenge is asked to make a donation to an ALS charity of their choice. The stunt so far has bagged the ALS Association over $20 million in donations since the campaign started in July. Fairly interesting story, that. Onto the currencies now for you. Now, yesterday the feeling in the market was that perhaps we would see a rise in inflation in South Africa. It moderated year on year, however, it quickened on a month-on-month basis. The rand, however, did post its fourth day of losses, and the bulk of that is something to do with what we spoke about at the start of the bulletin. The ripple effect, of course, of the downgrades by Moodys, erring on the side of caution rather than laxity, as we saw back in the early part of the last decade. And that's it for this edition of Global Business. Do send your feedback to the program at globalbusinessafrica@cctv.com. We're also online on Facebook and on Twitter. You can stay in touch with us over there. Thank you so much for watching this edition of the program. We'll see you tomorrow. I'm Ramanyan.